Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by Delta.Exchange. Apologies once again. I thought today the video will be ready. To my surprise, I found out that in my new place, the internet connection is still not ready. I am just doing it in mobile. By tomorrow, it should be ready. Coming back to the markets. US markets shot up on Friday because the government announced that the inflation data, which was announced earlier as 0.3, was actually 0.2. So they reduced the actual figure. So because the lower inflation will increase the expectation of rate cut sooner than later. So because of that, US markets crossed the fresh all-time high. Earlier all-time high was around 5,000 and yesterday it shot up another 1%. Particularly Nasdaq moved much higher, though Dow fell slightly. So because of this, Asian sentiment is good, though many Asian markets are closed for Chinese New Year. The markets that are open, they are looking good. GIF Nifty indicating about 100 points gap up, and that is something big. Given the fact that last week the markets were very lackluster, and especially after the RBI policy. Yesterday I could not do Dalal Siddiq Ahead program because of internet connection. Now I'll just talk few minutes. If you look at the broader picture, our markets were very bullish because in the beginning of this year, like world analysts said, Japan, India, and Vietnam are three promising markets for the year 2024. So because of this, our market was really very good. FIAs were continuously buying. And Nifty traded and closed above 22,000 on two trading sessions just before January 16. What happened on January 16th evening? HDFC Bank result came. On January 17, markets were not happy with the HDFC Bank result, and then Bank Nifty gap down open 1,500 point. On a closing basis, it was down nearly 2,000 point. So after that, the markets, have gone into a bad situation. FIs started selling since then. So this HDFC Bank single-handedly brought the markets down, while before the HDFC Bank, IT stocks took the market higher. So after the HDFC Bank result, Nifty traded above 22,000 three times, but all the three times Nifty could not close above 22,000. The intraday even it took a fresh all-time high on one day, but closing was really very bad. So any attempt by the Nifty to trade above 22,000 is met with a good selling pressure. So therefore, logically now we need to assume that if Nifty closes above 22,000, then the markets will turn bullish. So clearly the resistance is around 22,000. As I told you, 3 days it traded above 22,000 but did not close above 22,000. In the whole series, 2 days it closed above 22,000. That is before the HDFC Bank result. Now HDFC Bank is looking very bad. I think it is more than 15-18% down from the recent high. So clearly the resistance is there. Now support, I think it should come around 21,500. As I told you, 21,500 to 22,000 is a box, and it was trading there, but sometime it went above this box, sometime it went below this box, but again it has come back, and that is the case since the last 6 weeks. January series 4 weeks, February series 2 weeks. So in the last 6 weeks, I know the markets on a close to close basis has not gone anywhere. December series ended somewhere around 21,750, and yesterday or day before yesterday also the Nifty was somewhere there. So what happens in our market? One day banks go up, the IT comes down. Next day IT goes up, banks come down. So then if both goes up, Reliance come down and other stocks come down. So the markets are, moving in a zigzag manner, but markets are consolidating, but consolidating with a huge volatility. So uh, as I told you, the first resistance is around 22,000 and the second resistance naturally will be 22,200. Why 22,200? The recent all-time high is 21,125 and usually option prices will follow the future prices. If the spot is 21 to 22 125, then the future should be around 22 200. So that is why even the last week also I forecasted the same range, 21,500 on the downside, 22,200 on the higher side. So I think this week also the same story will continue, but the things are slightly getting better, and FII selling is also getting reduced. And last week, this RBI policy came as a shocker. There was no interest rate hike, there was no nothing, but what brought the panic in the market is a PTM Saga. The PTM fell 50% and due to RBI action. So some market participants thought, if RBI can take such a stringent action against PTM, why not they can take the same action against HDFC Bank or ICICI Bank or Axis Bank. So because of that, the private sector banks fell, So in the last 1 month, Bank Nifty has fallen 2000 point from intraday high to low 2 times, 1000 point fall from intraday high to intraday low. So taking these 4 trading session, Bank Nifty falling 6000 points. So you can imagine the kind of volatility that we are going through, but I think all the events are over. So therefore, in fact, today CPI inflation is there from India. So the banking stocks may see a kind of a shock covering ahead of this event. And tomorrow, US inflation is there. So because the US markets are looking really very good, so there is no reason for us to fall drastically from here. But we have already fallen, and the private sector banks. But luckily, public sector banks shot up to compensate the losses. But it cannot compensate because like private sector banks has a huge weightage. And State Bank of India is going for a dream run. And so it was consolidating around 600 rupees for a long time. Now it has broken out, so it has crossed 720. Even the 800 call option is trading very very actively in State Bank of India. So people are expecting, who knows, it can go to 800 also. But my personal opinion is that it will be very very difficult. So today gap up, the big question is whether the gap up will be sustained or not, or the selling pressure will come. That will be difficult to say, but however, you have to be very very careful if Nifty spot crosses 22,000. So let us see what is going to happen today. Hope you enjoyed listening to this audio. Thank you for listening.